Hi guys, this is your host Vignesh. Please subscribe to my channel so that you can get every time a new technical training related stuff in my channel, and moreover you can have click on this bell icon so that you can have much more updation of all my videos which would be coming into the week on weekdays. Hi guys, this is Vignesh, your host in those who confidence trading. For the lot of time what we have searched in that there are so many technical stuff which is embedded in this industry, where in the stock market, where you need to understand how the technical basics work. So how we are gonna work here is, as you know, that I have made some videos where we have learned about how the ADX and OBV works. Now I have brought you another video of MA. So what do you think that what MA is? MA is basically as moving average. Moving average. Now you would say moving average. Moving average is basically an averaging of the closing prices day by day. You need to see this thing very seriously, because what the strategy I'm using here is completely different what you have been looking at your charts. Yes, you are right, you're listening it right. Today we're gonna understand how basically it's working, how basically I use in my charts here. Here itself you would be getting my strategy in a correct and a clear way. So now what we're gonna do is we just first understand. You have been listening a lot of time that what is MA, you need to do this MA, you need to input this MA. So MA is basically a moving average. So today we're gonna come from the basics and go into the deep of an MA. Yes, you are listening it right, MA, moving average. So what the basically MA is, that every day closing price moving average is got its closing price data is added and averaged it. Let us say that I'm taking a 10-day moving average. So what exactly it is doing is from today, and from today backdate 10 days. So today we have like 15. So what I'll do is, when I'm inserting an MA inside, it would be calculating the average from the date today to the previous 10 days. So the fifth one would be the first day, the fifth day. But in here that there is a difference thing. So as you know that in the stock markets there are only 2 days which are not working, and after 7 days 5 days are we have the stock markets working, and 2 days we don't have it work. So let us understand that five days, in that days 5 days 2 days out, again the next 5 days 2 days out, and again next 5 days. So that would be the 15 days time frame. So 2 days from now, so let us do one thing. Let us have this this calendar. So if I want to see it today, then the 10 days, so 10 days I'm inputting, right? So 1 2 3 4 5, we am not taking this one, right? So 5 6 7 8 9 10. So the Monday 1st May would be the first day closing price, has to be starting from that day. So the 15th day, so closing price of Monday, adding the closing price of Tuesday, Wednesday, Thursday, Friday, 8th, Monday, 9th, 10th, 11th, 12th, all these days got averaged, divide by 10, and then the moving average is shifted day by day. Okay, so for a clear picture, what I'm doing is I have made an Excel file here, so that would be very much clear about how it's working. So let us see this. Let us take this first day, the closing price was 20. So this is the stock where the 20 price it is. So 22 is 25. The next day it is closing. Third day is 23. This is the random numbers which I've taken. The fourth is 24th, fifth is 25th, sixth 21st, 7th 23rd, 8th 21st, and 9th is 28th. Now the 10th day would be the today's date. The closing price is 24th. So the moving average for today is 23.4. How it came? what I did is I have simply put an simple example, or what would say formula here, where what I'm doing is I'm taking all these dates closing price, I'm adding and dividing by 10, correct? What I'm doing is I'm taking this 10 days closing price here, and what I'm doing is I'm putting in formula where I'm dividing it by 10, so I got one example, one exact moving average. So this would be the average for the 10th day. So this continuously works on up till the days which we would be looking at. So this is all the things. Next, if why this is blank, so what do you think, that this all should be blank or what? No, it is because I'm taking an example. This has to be the previous days which we are not taken right now. So now this is how it works. So this would be the pattern which would be making inside the charts. So what I'm doing is, let us put some of the moving averages in it. So the example very simple. I'm taking an Axis Bank. So in this, what I'm doing is basically I'm taking it a day wise, so day wise chart. In that you can see here that I am using the indicators. So the first one, what I'm doing is I have used a website called as investing.com. This is very good website for this charts and all. So I basically use this for indicators and for inserting indicators and all. So what I'm doing is here I'm taking also 1 day, and in that, over that, what I'm doing is I'm adding some indicators. So let's just have a look in this. What I'm doing is I am inserting some indicators. In this indicators, you can see what I'm doing is I'm writing and moving moving average. So let us take this moving average. Okay, so 2 moving average. I want to take 2 moving average. Why? Because I'm using in my strategy. Using it is my strategy. So what my basically strategy is here, that I am exactly doing, I'm inserting one moving average which is smaller date, and using one more moving average which is a greater day. Why? Because when I just want to know the pattern, how it is going, like it's going up or it's going down. Basically we need to understand the pattern, how it works. So what I'm doing is, first I'm taking an MA of 15, so 15th day moving average, and I'm taking one more moving average which leads to 50. So this is my strategy which I use. You can insert your moving average in it so that you can have a clear picture how it works. So now you need to look this very carefully. Why? Because when I have inserted this, you can see the crossovers. Are you seeing this crossover? This is very interesting, man. This is very interesting. Do you see the crossovers? See this crossover, this crossover. Let us see one more crossover, this crossover. You can earn it very simply, man. You can earn it very simply. This crossovers, this crossovers, this crossovers. You need to have this very much clearly, because this will give you, it will give you in sell side as well and in buy side as well, because you can clearly see how the pattern works here. You can see it. Okay, now just I'm taking one simple example. That now let's take one. See this, I like the selling position very good, so that's why I'm taking the sell position right now. So you can see this cutover when the moving average of the MA15 is crossing the moving average which is greater than that 50 moving average, then it is a bullish one, because it is crossing down. So this crossing down has leads to the market to go, if for example in the futures, if you're sold it in the range of 560 or 550 down, when this crossover happens, see it's 464. So you can understand it is like 100 points from there sold. Just imagine when you have done in the futures, you are very good in the patterns of amounts. So when I'm taking in a different way, now I'm taking a bullish pattern. See this? I have crossed it, right? So this has crossed this, and see where it goes. I'm taking this support, okay? Taking this support, it's going up. Taking this support, is going up. So this is the support for, so now the 15 MA is a support. Okay, so now the moving average is a support. The 15 number is a support for this this amount, this prices. See, so once it has crossed, okay, now you would say that why it's crossing, but this pattern is not crossed, it's still moving position. So it has touched here, going up, touched here, going up, touched here, going up. Now seriously, this has come down and made a downside pattern, so it's bearish. Support, as I said, support, resistance, or you can say support, and then it has crossed, making a support. Okay, so this is the resistance basically. So this is all the resistance, this is the support for this patterns of prices. So this is very interesting, guys, you should try it out. So what I'm doing is I'm taking a different example. What we should take, or should take, let us take Yes Bank. As you know that now Yes Bank has crossed its positions down, so I'm taking an Yes Bank. So let us see how the Yes Bank works in this strategy. So you can clearly see the pattern making. Now this is the crossover, like 702 prices. Once it is crossed, support, done, crossed. Now it's crossing like not correctly, so that's why resistance, gone. From here it has took one last one, again crossing. Now it's in 1187, passed, support, and support. Now what I can see here, so let's predict the future now. So what I have done here, it has crossed now. So what I think would be happening here, that it would be crossing, and once this crossover comes, you are the guys and you are the god for this. Now you would be very much familiar what I exactly shown you here with those patterns. This cross down, it has to come and take a support of 1089 support levels. So this is how it works, guys. This is very simple. Similarly, you need to take this. What did I take? I just cancel it out, and I'm taking an EMA level. So EMA is exponential moving average. What this 10 EMA is doing is it's taking a 10 daily, but the EMA is taking the previous day more efficiently. So EMA would be like taking and more efficiently data of a previous days. So what I'm doing, I'm taking in again Axis Bank, and in Axis Bank what we need to do is what I'm doing is you need to put some MA, which is exponential, and I'm taking two exponentials. Let us edit this one and put this 9 as 15 as the same which I have took. This is my strategy, guys. You can try it in a different way. Now this is 50 what I'm taking, the similar way which I have taken in the previous, guys. Okay, so see, this is the pattern which is very clearly, very clear. So crossover, down, taking resistance, again crossing, support, and now it's crossing. This is coming consolidation zone now. So we don't exactly know that where the market is actually going, the stock is actually going. So we don't know exactly where the market is going. So this is how the consolidation zone which I take it. Now what I want to say is this crossover is a bullish crossover when it is crossing the 15 MA in the up direction. So this is bullish one. When it is crossing down, so it is down one. So guys, let us do one thing. Let's have some understanding, and let us put your strategies, and just ping me, comment me your strategies, your different MAs too in the comment section below, so that I can have a learning as well, because knowledge is for sharing, guys. It's for sharing. So if you wanna share with me, I would be more than happy. And for the next video, what I'm doing is I would be bringing one more indicator, that is a KST, no short thing, no short thing. That's very interesting, guys. You need to see this, you need to see this. So thumbs up, guys, very good. So I'm very excited for a new video, and thanks for supporting me. And don't forget to subscribe, guys. Please comment me, please comment, and I need to know how everything going. Thanks.